This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. You are listening to your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is May 29th, 2020. This is show number 44. Hey, it's Friday, Nick, and usually Friday is supposed to be slow news cycle, but not today.
No, not today. Looks like we're going to have the 2 o'clock press conference coming from the White House, and that's going to be all about what they're going to do regarding China sanctions. Are they going to put sanctions on China? There was a tweet out earlier, I think, from Bloomberg that basically said that the Chinese finance sector could see some sanctions. And this is all basically over the trade policy that's going on in Hong Kong as well. So there's a lot going on right now. China's got their hands in a lot of cookie jars, whether it's Hong Kong, the little border dispute with India, as well as, always problems with Taiwan. So this is going to be interesting. And I think the markets are jittery right now over it. So we'll see what comes of it. But I don't think it's a terrible day out here, even though the markets are down across the board. The Nasdaq is actually, as we speak, is actually in the green today, up 11 points. So, we're seeing the Dow, we're seeing the Russell down today, and we're seeing the S&P 500 down, but they're not down all that much. So I don't think it's a terrible thing. The markets usually have a lot factored in. Also, if I may, the Chinese ADRs are not doing poorly today. In fact, if you look at the FXI, which is the iShares China large cap ETF, that's actually positive by 25 cents. So this may be a lot of bark with very little bite.
Yeah, well, one thing they're planning in Congress, whether it'll pass, who knows, is to delist Chinese companies from the exchanges. And the one thing you know about Chinese companies, publicly traded companies, you can't trust one number that's on that balance sheet. Unless you can hold it in your hand, you know that it's probably going to be fraudulent.
Well, you can make a fair case of that if you just look at Luckin Coffee. This was a stock earlier in the year was trading above $50 a share. It's now down to $2 a share based on the back of fraudulent accounting. So this isn't the first time, we've seen that happen with a lot of the Chinese ADRs, American Depository Receipts, which are the companies that are traded here, but they're Chinese-based entities. But Luckin Coffee is just a long list of many of these, fraudulent number type Chinese entities that have come around throughout the years. But, you do have companies like Alibaba and Baidu and JD, maybe they're putting up real numbers. I would have to think they are because they're big companies. They have a lot of U.S. bankers that are involved in those names. But when you look at a company like Luckin Coffee, I remember so many of the talking heads on CNBC love this stock so much, and so many people I know are in it. And here we are looking at a $2 stock when, in January it was trading above $50.
Hey, and that's a good point in that the charts can save you from these fraudsters, right? I mean, it was obvious in the charts there.
Yeah, it was obvious. I mean, it peaked in January. Then it went and made a sideways bearish base in February. It felt like everything else in March, but it was still a $25, $26 stock in March and was making bearish consolidation. And then, basically the start of April, you wake up one day and the stock's down to $5, and now it's down to $2. And I think it's going to $0. But that's my opinion. But yeah, the charts always can save you. And that's why you want to really follow the charts and you want to listen to what they're telling you. And again, I can't tell you, Kerry, how many of my followers and members were asking me about Luckin Coffee because the talking heads on CNBC were touting it so much. And I said, do not touch that stock. I said, that is a poison stock. I said, there's nothing good in those charts. Leave it alone. And sure enough, we didn't make money on it because we didn't short it, but we sure as heck stayed away from it. And that was a big saving grace.
Hey, and the one thing we know when you go into a major recession or potentially a depression, and we can debate that. But all of these fraudulent little companies that were booming in the peak of the bull market will find their intrinsic value, which is usually zero because they're scams.
Yeah, the same way, Bernie Madoff went under in 2008. I mean, it's all relative, and that's exactly the truth.
Yeah, so recessions are the ultimate honesty test, right? Because if you can't make it through the recession, then you probably were a scam.
Yes, that's usually the case. And this stock, Luckin Coffee, and ticker symbol is LK if anybody wants to look at the chart. But I mean, you could see the writing on the wall there. And there are a lot of other, Chinese ADRs where the writing's on the wall as well. So it will be pretty interesting to see how this all plays out. Now, I am in the camp that, you have an Alibaba, which is a pretty legit company, in my opinion, from what I can see, all metrics there. But there are definitely some scam companies out there, and the accounting standards, like you just said, you really just have a hard time digesting them, and you can't trust them.
Yeah, and we're going to see lots of more. So Luckin Coffee, LK, and they're not so luckin now. I think people are finding a lot of other choice words to describe them, and they were going to be the Chinese Starbucks, right?
They were going to be the Chinese Starbucks, and it doesn't appear to be happening any longer. So,
definitely not.
I would just stick with Starbucks.
Yeah, well, hey, buy the coffee, sell the stock, or buy the stock and sell the coffee. I'm not sure which, but Starbucks has got staying power. I will say that. I've doubted their business model and their peculiar mixture of politics and coffee together. But it seems to be working because you don't really have a lot of choices. Dunkin' Donuts. It's Dunkin' Donuts or Starbucks. And we like those kind of brands. So gold and silver, major upward moves. What's going to happen after that news conference? Because I think they're closing, their rate. I mean, gold's up $18 the ounce on the spot. And according to Kitco, silver was up, silver is really up today, 57 cents. That's 3%. I know you like to see them kind of settle down and consolidate, but it looks like the market has other ideas.
Yeah, I mean, the silver pattern, by the way, is a very good pattern. I would love to see it consolidate because I want to get back in that, and I did sell out of my play there. But today you're seeing everything precious metal on the move. It doesn't matter if it's silver, which is up about 3%. You have gold today up over 1.3%, $22 move on the June contract. And then you have GDX, which is gold miners. That's up over 2%. And the SLV, the silver ETF, is up over 3%. So, I mean, it's really across the board. It's hard to keep a good commodity down. And, again, gold and silver, in my opinion, are the ultimate play when it comes to the central bank money printing. Earlier today, we had Jay Powell give a speech, and he said, we have unlimited resources. We're not going to go to zero interest rates or negative interest rates, I should say. But he basically said, we have unlimited money printing ability, and that's the ultimate catalyst for gold and silver and all precious metals. Yeah.
So because whether you believe in the quantity theory of money or not, at some point you have to believe in it, because if there's a zillions of dollars of fiat dollars chasing around a finite amount of goods and services, you have to have a price increase, right?
That's kind of the way it works. Now, the reason, well, we could get into that, but right now there's still a lot of confidence in the market, and that's a good thing. We don't want to see confidence dissolve, but just understand, as we said, and we'll keep it real simple for today, but this is very, very positive for gold and silver, and everybody, in my opinion, should have something.
Yeah. Hey, and even if it's going to the coin shop, buying $50 or $100 every week or two, I've told people for years, don't treat it as a profit-making potential, although it could very well turn into one. Treat it as an insurance policy, because when it comes to the government, who the heck knows if they know what they're doing and how they're going to figure out a way to screw things up And you can never forget, like the old economist Harry Brown used to say, the government is always the accommodating loser. So meaning that they don't trade for profit, they trade for political reasons, and therefore they're going to pick up everyone's losses in the final analysis. And that's what they've done here.
Yeah, and that's what they'll continue to do. That's just what government does. It doesn't operate in the black. It operates at a loss always. I mean, just think about it. You have the politicians out here, and you could go back, 20, 30, 35, 30 years. Some of these people are in office for 30 years, and they've allowed the debt to balloon to where it is. And that's disgraceful. I don't care what side of the aisle you're on, just to see the debt go where it's gone. It's almost like that Star Trek saying they've gone to places where I forget how it goes.
Where no man has been.
Where no one has been before. I mean, this is incredible. But it's the same politicians over the years that just allow it to go higher and higher and higher, and the same people keep voting these people in. So, unfortunately, you're really, as you said, your only insurance policy is the precious metals.
Yeah, and it's so funny. I had a guy on who was a former New Jersey General Assembly guy for 12 years, been involved in government, and the government can't figure out why 83% of the population distrusts them to do the right thing and to handle these emergencies like the lockdown in the pandemic. 83% don't trust them. I want to know who the 17% are who do.
That's what I was just about to ask. Well, who are the 17?
Yeah. And he said, well, they're the people who don't really care because they're so wealthy. They just do what they want to do, and they don't think about the government, which is a real ringing endorsement, isn't it?
It sure, sure is.
Yeah, well, I always think back to Will Rogers, one of my favorite homespun comedians and heroes, and he always used to say, ignorance got us into this mess, and ignorance will get us out.
There you go.
And he also said you can't cheat an honest man, but that one I tend to take issue with. But certainly these markets pretty insane. Well, the sectors we've been following, though, even though today's a down day, they haven't gone down that much, have they?
No, they haven't gone down that much. And, again, as I say, I mean, I don't know what what the market will look like by the close today. But what I'll say is there's nothing really wrong with what's happening out here today. So, again, we're just getting some backing and filling, and, nothing's really changed, in my opinion, from what we've been talking about.
Yeah, and I'll go back to what you said on Tuesday when you get that big opener on a Monday, but this week we didn't have Monday because of the holiday. When you get that big opener at the beginning of the week, then you're gonna go fill and
going to do backing and filling.
And filling, right?
That's exactly right, and that's been kind of the MO for a while now. So we're just seeing it again. Today I kind of expected the markets would be lower. In fact, I told all of the members last night, I said, hey, we're going to have this news come out, and the market's already selling off into this news. So, we'll see how it reacts by the close today. That'll tell us a lot more. But overall, I don't see anything all that terrible out here today. You have some equities that are getting hit a little bit, some are down. But for the most part, nothing dreadful. And that's exactly what you get when you're up in the beginning of the week, especially on a Monday. This week being a Tuesday, since Memorial Day was on Monday. We're just getting some more backing and filling. This is exactly what I thought we would see.
Yeah, and I think the fact is that most states have a plan now to reopen. Everything's going to start reopening just about, maybe not New York City, on June 1st. So that's next Sunday, I guess that is. And so there'll be phased reopenings. But the strength of that trend probably is enough to offset anything else that happens, either domestically or in the world at large.
Well, like I always say, we're going to watch these charts. And right now, the charts to me are whether or not we even pull back here, that remains to be seen. We could pull back for a week or so, but there's no real problems yet, and that's the good news. So I always tell you, Kerry, I never want to see, gold go parabolic, because if it goes parabolic, then we know the move is coming to a conclusion and it's going to be over. We always want to see markets go up a little bit, take couple steps backwards, start to move up a little bit, build the base, and then break out, then pull back a little bit. That's what you want to see. A lot of people, I said, I guess on the program, that's what we look at in order to see a healthy market. And people are, tweeting to me, that's not a healthy market. That's not a healthy market. But, you got to take it from a trader's perspective, and you can't go ahead and, take it from a perspective of being a citizen. You have to take it from a trader's perspective. That's what traders want to see on the charts. Totally agree with you there. And we're going to talk about in upcoming shows probably next week about a trader's mindset, how to develop that mindset. I think we kind of take it for granted. Many of you out there have it, and you probably don't. And there's rules, right? Just like in any profession, Nick, there are rules. Absolutely. There's plenty of rules out here, and you have to really abide by them. And even all the years I've been doing this, when I break my own rules, that's when I get burned. So, again, you always want to practice what you preach. It's always easier said than done. But, you have to have an established set of rules going into this business if you really, really want to do it for a living. And the people that do and follow it and don't break it, they usually are the successful ones. Yeah, I couldn't agree with you more. Hopefully one day I will be too, because I've never followed any rules in my life for a prolonged period of time. But you need to go over to inthemoneystocks.com, check out Nick's trading record, and a whole lot more valuable information you'll find on the site. Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz, that's ours. And write us an email. Let us know what you think. KL@kerrylutz.com. That's it for Friday. And for this week, Nick, we will pick up where we left off on Monday. Sounds good. Thank you. This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.